Today we're going to be taking a look at the ETFs that I'm currently holding. It's almost 2026, and all of these investments will be remaining as a part of my investment strategy for different reasons: growth, dividends, diversification. My goal is to build wealth for myself and my family, not financial advice. I'm just sharing my current journey. I'm going to share my results of the investments and be on the lookout for a video coming soon when I will be sharing a new investment that I'll be adding for 2026, another ETF. So let's get started with ETF number one, and it is VTI, the Vanguard Total Market Index ETF. It gives you exposure to the entire U.S. stock market, large cap, mid cap, small cap stocks, all in one ETF. This is one that I've been consistently investing $10 daily into for about 3 years now, letting compounding do its work, reinvesting those dividends, and just allowing this to slowly build and grow. I decided to incorporate VTI because I felt that I was getting too heavily weighted into individual stocks like my Apple, Google, Tesla, NVDA. So I wanted something like this to balance it out. This is one that I'm comfortable holding through bull markets, bear markets, recessions, rate hikes, rate cuts. I know that it's going to recover. And so I chose this one to be one of my core foundational investments. Year to date, it's up 16.76%. Here are my results. I'm getting close to 35 shares. The total portfolio value is $11,778. My average price is $248.58. And as of the time that I'm recording, the share price is $338. So I have a gain of about 36% since I started investing over in this portfolio. This video is just ETFs, not my mutual funds or index funds. I'm still holding my VOO, which is Vanguard's S&P 500 ETF. Overall, it was a red day on the market, but year to date, VOO is up about 17%. This one gives you exposure to the top 500 companies in the US. You definitely can choose just one, VTI or VOO. There is a lot of overlap when it comes to these two investments, but I've been okay with that. This one gives me exposure to the mega cap performance because it is highly weighted in those companies with the largest market cap, like NVIDIA, Apple, Google, and Microsoft, to name a few. Now, when it comes to VOO, I do not invest into it as consistently as I did with VTI, but I've been buying fractional shares since back in 2022. When the share price was about $325, I got started building little by little. And now, as of the time that I'm recording, the share price is $632. Over time, I built up to 20 shares in my portfolio with an average price of $435.61. This position is currently valued at $12,678. I'm up almost $4,000. I've gained about 45% so far. The third ETF we're going to be taking a look at is SCHD, and this is the Schwab US Dividend ETF. This ETF focuses on companies with strong balance sheets and a history of paying and growing dividends. When it comes to this position, I'm not currently building into it. I've decided that I'm going to be more focused on growth right now. I think that this is an investment that I'll shift more to later in life for that steady income, something to smooth out the volatility and just build, reinvest my dividends, and allow it to be a source of income. But for now, I think my money will be working better if it's positioned for growth than something this stable. Year to date, up only 1%. But this is a go-to for many for that stability and dividend growth, just like realty income. So when it comes to SCHD, I'm currently holding 57 shares in my portfolio. I'm up 8.36%. And for now, I plan to just hold on to this one. Next up, we have SPHD, and this is Invesco's S&P 500 high dividend, low volatility ETF. Year to date, there's been no growth when it comes to this investment, but zooming out to the 5-year, it's up 28.37%. So this is one of those investments that is not heavy into tech, which has been dominating the market. It has a yield around 3.8%, and a fund like this might start to look more attractive when interest rates come down. And just like with SCHD, when you're focused on gaining income, this one pays a monthly dividend. So I incorporated this a few years back along with Realty Income, which is a REIT, and Main Street Capital, which is a business development company, one that I thought would pair well along with those other two investments that also pay a monthly dividend. All these investments have a different purpose, a different style. But when it comes to SPHD, another one that I'm just going to be holding for now. I currently have about 40 shares. I'm up 17.32%. And this is an investment that gives you exposure to companies like Pfizer, Altria, UPS, Verizon, and Bristol Myers, something different, not the names that we hear so often, like NVIDIA, Apple, and Microsoft. Next up, we have my newest addition, which is SPMO, Invesco's S&P 500 Momentum ETF. Year to date, this one is up 27%. It focuses on stocks showing strength. This brings exposure in my portfolio to the momentum market without having to pick individual stocks, which is what investing into ETFs is all about. It's more aggressive than the other investments that we've looked at today. And that's by design. Not every ETF that I'm going to be incorporating into my portfolio going forward is going to be conservative. I'm striving for growth. And this is one that is definitely different. It has a tactical approach of finding those investments with the highest momentum score. So current share price is $120.63. My average price is $118.89. I currently have 151.5 shares. I just started building up this position about 2 months ago. I'm currently up 1.53%, and I just received my first dividend of $43.99. And last up, number 6 for today is FBTC, which is Fidelity Wise Origin Bitcoin Fund. If you've been watching the markets, you know that crypto has had a pullback. Looking at Bitcoin, we can see that it was over 120,000, currently 87,000, down about 8% on the year. Just like this fund, down 6.99% year to date. I like having exposure to Bitcoin, but I'm intentional about it. I invest what I'm comfortable with, and I have an understanding of how crypto moves that I could potentially be holding for 3 or 4 years before seeing the gains and the rewards that I'm looking forward to. But I've had Bitcoin, Ethereum, XRP, and other portfolios for a while. I wanted to incorporate some in one of my portfolios over at Fidelity, and so this is the investment choice that I decided to add. And my total gain, I'm currently down 6%. I have 72 shares in this portfolio, and my average cost is $81.57. So when it comes to incorporating ETFs in your portfolio, they can give simplicity by allowing you to invest into hundreds, sometimes thousands of investments through one investment choice, a whole basket of stocks. You can go with something basic, a core investment like a VTI or a VOO for stability and steady growth that you can definitely hold for the long term without fear of the investment recovering. If you're ready for stability and income, you can incorporate those investments that are reliable and will give that steady paycheck like an SCHD or SPHD. And then I have investments that are for that potential growth like an SPMO and FBTC. And now that I've decided to let a few of the ones that I currently have in my portfolio remain, but be on hold as far as me building up my position, I'll be focused on bringing something new in for additional growth. Let me know, do you hold any of the ETFs that we took a look at today in your portfolio? Are you thinking about adding something new for 2026? Share some of your results as far as the growth that you've achieved since incorporating ETFs like these into your portfolio. Thanks for watching. Make sure to like, subscribe, put on that notification bell so you can keep up with all of my videos and live streams. Check out my referral links. There's one for MooMoo if you're ready to start a new investment account, and consider joining channel membership. All that information will be in the description and pinned in the comments. Okay, bye.